Hi everyone, my name is Rishad. Today is the 17th of September 2023 and I'm making my weekly prediction for SPY and going over last week's prediction. As usual, we'll go over the monthly, weekly, and finally the daily charts, and then we'll switch over to the Excel sheet and I'll give my overview of the prediction. As usual, it's important to make the disclaimer that all information in this video is completely for educational purposes, and taking positions in the market based solely off of this information is unadvisable because markets are subject to risk, and it's important to conduct your own analysis before entering positions to avoid any unnecessary losses. Now that we've gone over the disclaimer, let's get into the video. Firstly, we can see the monthly charts. Here, we see we have a long-standing uptrend. This is obviously the same as the past few videos since we cannot predict on the month of September yet as it hasn't closed. However, we can see that we've had this long-standing uptrend. Then we see a hanging man candlestick. Now, this generally signals a reversal from up to down since it shows indecision in the market. And we can see that the current month is red so far, but we do have to wait for the close to confirm this. If this month does actually break below the trend line, we will see this, and then we can adjust our monthly positions. As for the RSI, we can see that the RSI did cross here, but it has been going down quite recently. So now let's switch over to the weekly charts where we can see this price action in a little bit more detail. So we clearly see this upwards trend line in a lot more detail now, and we can see that we had this bounce back and then a short 2-week upward channel, and then we have an inside bar from last week, which as of this week has still not been broken. So for the most part, our prediction is pretty much exactly the same because the mother candle needs to be broken before taking a solid position. However, we can see that there are 2 consecutive red candles, so there is a good chance that the market will go down, but we have to go to the daily charts before making this a more concrete prediction. We can see the RSI, average RSI is still going upwards, however, it is starting to flatten out, and the RSI, the normal RSI is just erratic as usual. So we do need to see a crossover from either side to add on to the current signal. But as for the moment, we can see that this current week's candle has actually broken a support. So that in itself is a bearish signal as well. So let's move over to the daily charts where we can see this in a little bit more detail. We can see we had this channel and then we had the breakout. And now we have this inside bar candle. We can see we had a lot of small bodied candles, spinning tops and dojis. However, this last candle on the 15th of September was a large red bodied candle that did go significantly downwards and broke the support. So technically, this would be a strong bearish signal. And we can see the RSI and the average are starting to intermingle, and the RSI did break the average downwards from below. So we can again take this as another bearish signal. However, one thing to note, which is also going to play a big part in the trade this week, is that there is the Fed interest rate decision and the FOMC meeting. So these events can very significantly sway the markets. But as for the technical analysis part of this video, it's very clear that there's an inside bar and we need to see the break of the mother candle before taking a position, regardless of whether the bias is either bullish or bearish. And when we switch over to the Excel sheets, we can see that the option chains actually give us a contradicting signal, which is actually quite bullish. So we've covered the technical analysis part of this video where we can see that the mother candle has still not been broken. The RSI doesn't show any clear signals other than the daily chart, which currently shows that the market has a bearish bias so far. So let's switch over to the Excel sheet where we can review the prediction in a bit more detail. So here we are in Project 1, this Excel sheet that we've been going over for the past few months and outlining every single prediction that I made. So last week we had the prediction to wait for the mother candle. This clearly did not happen, so we did not actually have any entry in the market for the week and therefore no profit, no losses. This might be subject to change this week though, since technically the market is indicating that it's going to go downwards. But let's take a look at this prediction in the option chain and see if there is any other signals. So the current prediction is no trade yet. We wait for the mother candle to break out, same as last week. Buy when it crosses the high at 453.67, sell when it falls below the low 439.97, and with a target of 1% or 0.5% if it's the last day with a trailing stop loss. If a position is entered and the stop loss or target isn't hit, then we take the closing price on Friday. The max OI for the monthly expiry is 450 for CE at 50,075 and 430 for PE at 141,366, and the monthly PCR is 3.35. Now this is quite a high PCR, but when we go to the weekly charts, we can see that there's an absurdly high PCR for the week. The max OI for the weekly expiry is 455 for CE at 13,700, and 430 for PE at 32,660. The weekly PCR is 4.82, which is what I mentioned earlier. It's an absurdly high PCR, showing that there is a very, very high surplus of put sellers, which shows that there is quite a high bullish bias or bullish sentiment in the option market as for the week. And we can see that this is going to play a major role in the market, as it might happen that the market opens on a gap because of this very, very high PCR for the week. And we can see that there is quite a high bullish sentiment, which completely contradicts the technical analysis, which shows that the market is actually to go downwards. And this is why it's important to wait for the break of the mother candle. Since if there is such a strong bullish conviction, then the mother candle's resistance will be broken relatively easily. However, if there is to be a bearish continuation, then there will be met with the bullish conviction. And if it is to win, then the market will go downwards. And then we have another clear sell signal, since it will cross through a few supports and therefore solidifying the results. And the weekly trend currently is down, monthly trend currently is up, and these are subject to change depending on the relative closes. So this wraps up the video for this week, and we also need to be aware to be a little bit safe this week, since there is the FOMC meeting and the Fed interest rate decision, which can heavily sway the market. And that is a possible reason as to why the PCR is very, very high for the week, since there might be a lot of expectations that the U.S. market will do good this week because of the FOMC meeting or the Fed interest rates. So this is something to keep in mind as well. And more importantly, if you are to be safe, it's also advisable to wait for the 20th of September, where the data has come out and the meeting is finished. So then you can decide based off of that information whether to go up or down in the event that the mother candle has not been broken. So on this note, I'd like to conclude the video, and I'll see you next week where I'll make my new prediction and go over this week's. So thank you for watching and enjoy.